Welcome back, everybody, to the real estate circuit, builders, brokers, and beyond. I am your host, Kim Mashek, and today I have on with me BJ Hill from Summit Insurance. Welcome, BJ.
Thank you. Hey, welcome. I appreciate the opportunity, Kim.
I love having you on here. Well, tell me a little bit about yourself and how did you get into insurance?
Yeah, former, I guess, recovering college basketball coach for 20 plus years. Um, Went straight from playing to coaching, and that's all I knew. And then they retired me early, aka fired my butt in 2016. Bought my first agency in 2017, and not sure I could spell liability or insurance at that point, to be honest with you. But yeah, it's been a whirlwind. It's been fun, and it's grown like a weed and grown into other opportunities. We just recently um, opened an agency in Texas as well. So yeah, it's been a whirlwind to say the least, but it's been a great experience.
That is awesome. Yeah, I'm glad we have people like you because I don't understand insurance to save my life. So I know enough to have it. That's about it.
Yeah, it can get a little tricky. There's no question.
I'm sure. Well, what are some of the biggest insurance mistakes that you see homeowners or drivers like make,
Yeah.
and how can you help or how do you help them avoid them?
Yeah, when I first started the agency, it was built around lender and realtor relationships, and so I really got entrenched in that world, that those contracts, what needs to be done, and then as we grew to hit our goals and get where we want to do what we want to do, we kind of got into the lead game as well and buying paid leads, having telemarketing and all that, and since venturing into that, Kim, it's in listening into our sales bullpen, uh, it's been scary to see the quotes, hear it in terms of the volume of people that have, in our neck of the woods where we're at, six to $700,000 homes, and then have state minimums in terms of their auto insurance. And I think with me coming from a completely different industry in basketball and just like you were saying, just not knowing about insurance, we've really tried to hang our hat on education and kind of steer away from the multi-billion dollars of advertising from Progressive, Geico, things like that, where what that has done is it's created a culture of people shopping their auto insurance by their pocketbook and only pay for what you need, and 15 minutes can save you 15%
Hmm.
and all those types of things, which really leads you, if you've never had a quality uh, liability conversation with a licensed insurance professional, it can take you down the wrong road, and you start shopping by price rather than shopping by
Yeah,
protecting your assets and the liability that comes along with that.
that's yeah. I'm guilty of that in the past for sure.
Yeah,
Because you only make what you make, and so sometimes you
yeah,
have to cut corners somewhere. And
yeah,
unfortunately, it can't be food and it can't be a roof over your head, but you do
right,
need to protect that asset as well.
yeah,
So
yeah. I see, and I think what happens is a lot of those first time home buyers, like you're talking about, they're not getting educated enough on, hey, you may want this house, but what state are you in? In our state where you and I are at, we're the highest premium in the country. And so on average, and so yes, I know professionals like you and me and the realtors, we all want to come together to make that home purchase dream a reality, but we also have to be realistic and upfront with the financials, like I know you are, and really educating people on, okay, this is how much maybe a house you can afford, but we also have to protect that house in
yes.
the right way.
Yep. No, for sure. And I mean, speaking of insurance premiums, and especially in Colorado, because I know, well, I guess correct me if I'm wrong, but I know a lot of people pulled out of Colorado for a while because of the high cost
Yeah.
and fire dangers and all of that stuff. I mean, I'm sure there are ever other driving factors, but do you think, I mean, obviously natural disasters are probably one of them, but what are other
Mhm.
factors that come into play when
Yeah.
we do see those? those prices go up?
Yeah, it's a great question. And I've been fortunate enough to speak to the Colorado Mortgage Lenders Association the last 2 years, and I get that a lot. And really, when it comes to insurance, Kim, insurance is like a two-sided coin. All right. And what I mean by that is what goes into the premium. One side of that coin is the property itself, and the other side, and what's included with that property is what you're talking about, where that property is located. Okay, so I kind of consider that one thing. In our state, like you mentioned, you do have the holy trinity of fires and floods and hail, which
Mhm.
is a nightmare for insurance. On the
Exactly.
other side,
Yes.
you have the person itself, the person who is obtaining that property and their insurance history. Do they love to file claims? Well, their premium is going to be much higher. If I go and buy a property at my age, and maybe my credit history and my insurance history versus my son at 23, we go to buy the same property, those premiums are going to be different. Um, but yeah, those three natural disasters that you talked about are big, for our state specifically. I think as the country as a whole, what you have is a bunch of carriers going from flat rate deductibles to percentage deductibles,
Hmm.
to try to, and the reason they've done that, Kim, is to try to limit the amount of claims that are um, being placed, because it's not that they don't want to pay out or understand they have to pay out. It's that for about 20 to 30 years now, we've had way too many people treat a homeowner's insurance policy like a maintenance policy. Hey, I want the lowest deductible. I've got $1,000 deductible, and then they get a $1,300 estimate, and they file a claim because they think they're saving money. And
Yeah.
really, what happens over the next 5 years because of that?
Hmm.
The insurance company is going to make that money back. So there's going to be a surcharge because they filed that claim, and we've had a whole population that has done that, which is also, I think, a big factor in the ramping up of home insurance premiums.
Yeah, I mean that all makes sense. And I mean this may be a stupid question, but you had mentioned history of insurance.
Hmm.
Does your history of, because I know with your history of car insurance, obviously
Yeah.
your premiums can increase if you're in accidents a lot or if you get tickets
Yep.
or blah blah blah. But does the car insurance history roll over to the homeowners and vice versa
Yes.
at all?
Great
They do.
question.
Okay, so
Yep.
they
Yep.
talk to each
So,
other.
yep, it's what we call as an insurance score, and for different carriers do it different ways. Our main carrier attaches an insurance score from 1 to 100 for each prospect that we quote. And what goes into that score is a lot. There is a credit aspect to it. There is obviously a claims history to it. There's age, there's gender, there's a lot of things that go into that rating factor. But yes, one will affect the other. There's no doubt, because they have so much data. Obviously, in today's day and age, they have so much data, and
Yes.
they know that if you're somebody that gets in a lot of car accidents, there's probably going to be a greater chance that you're going to have, some claims on your property as well.
Well, it's a little bit of recklessness across the board, right?
Yeah,
So.
yeah, yeah.
When someone's shopping for insurance, I mean, besides price, which obviously I know being in the
Mhm.
mortgage industry, everybody is very price conscientious, rate conscientious, whatnot. But what should people be looking for just besides the price? And I know you kind of touched on it with like coverages
Yeah.
and things of that nature, but can you mention any other things there that they should kind of focus on?
Yeah, I think it's understanding what you have to lose, and really, um, and what I mean by that is both your liability. How much do you want to protect your liability when you are at fault for something? But then also how much, your assets that you have to protect. And you want to come up with a dollar figure on that, and then you want to insure that accordingly. Uh, a great a great example is, I'll pick auto insurance. State minimums in our state are 25.50. It's pretty low,
Yep.
in that 25,000 for an accident, for property damage is pretty low. I mean, you rear end a Tesla because you're texting. or you're in, whatever, it's that goes by pretty quick, right? And then
Yep.
unfortunately what happens is if those damages are above your limitations on your autos, they're going to go after the equity in your home. Frank Azar is going to come and find out what your liability limits are and how long you've owned that property. Oh, I see you've owned that home for 10 years. And they start doing the mental math on how much equity you've
Hmm.
got built up. And depending on what you are at fault for, what you're liable for, they can go after that.
Yeah, that's kind of scary.
Yeah, it
Uh,
is.
I mean, and kind of along those same lines, I mean, what are some of the surprising coverage gaps that people don't know that they don't have until they have a claim filed or something happens?
Yeah, I think a misnomer and kind of a no-no in our office is when people use the term full coverage. I think that's one where your average client gets a little maybe misguided because there really is no such thing as full coverage. Again, a lot of people consider full coverage to be okay. I have liability, and then I have the property coverage for my auto as well. So I'm covered for at fault, but then the car that I drive and then the car that I hit if I'm at fault are covered. But that's not all there is. There's uninsured motorists protection. There's rental car coverage. There's a bunch of these, what I would call supplemental coverages that can have a pretty significant impact on you financially if you're in a situation that requires one of those. And again, people like you were saying, we can only pay for what we can pay for. And so if we're looking at a place to maybe save a couple of bucks a month and we don't want a rental car, but we've only got one car in our family and then that car's in the
Yeah.
shop for 30 days. Now what are we doing? So I think that's one where people say, well, I have full coverage. And if I were to put them on the spot and say, okay, what does that entail? I think most people would just consider those two main pieces. And then I would
Sure.
say the biggest piece as well is again that relationship that we touched on between how your liability limits are going to possibly affect that largest, usually the largest um, investment that we make in our home. We're working towards building that equity and building that investment. And most people don't understand how a mistake in your auto can affect that.
Right. Well, and I know I'm kind of focusing more on auto stuff at the moment, but it
Mhm.
boggles my mind a little bit more than the homeowners insurance does, I guess. But kind of like you mentioned, the uninsured motorist,
Yeah.
it boggles my mind that that even exists because, you have to show that to register your vehicle. You have to show that for
Mhm.
a lot of things. And it's like, how can someone not have it? And then
Yeah.
now they're gonna wind up making the other person like heavily, whether it's their responsibility or not,
Right.
like,
Yeah. A lot of people they'll purchase it for a month to do that, like exactly what you say, and then they never pay again, right? And then they're running or they're rolling the dice every time they get in a car, and then those people that are insured, that's why they have that coverage, and
mm-hmm,
um, but then there's a lot of people that will sign a waiver to not have that coverage. And that's something on our end. That's kind of a CYA on our end. If somebody chooses not to have that coverage because they think they don't need it for whatever reason, that there has to be a document that's that's signed off on to protect us that tells them that we offered it. So,
that makes sense. That it totally makes sense, but I mean, I'd like to see the math behind all of that and like who is not and who is and what the actual cost for those who are not actually is to the insurance
right.
company and or the individual. That's kind of crazy. But
Yep.
anyway,
I agree.
next thing, how does working with a local insurance agency differ from, because I know a lot of people shop online
Mhm.
anymore,
Mhm.
especially.
Yeah.
How would you explain the difference there? I mean, obviously, personable is probably a
Yeah.
huge one, but
I think it takes a little more effort than usually what people want to deal with. It's so easy to go online, right? And I can go online and get a quote. And yeah, my phone's probably going to start blowing up for the next couple days, but I can choose to go online and that's kind of where it started was with auto. right? It's kind of easy where people think it's easier. They start shopping by their pocketbook instead of those things that we've talked about. Um, I think personally, and obviously I'm a little biased. I think insurance is the most oversold, undereducated aspect of our one of the aspects of our adult worlds.
Hmm.
When we really look at it, it is so heavily marketed, it is so heavily sold, but very few times, again, as I'm listening to conversations when people come in for reviews, do they truly understand the protection that is available or the protection that they have in place. How does my roof coverage work? And it's hard. Like that's it's frustrating for us as people can go online and do their own insurance. They can get their own home insurance policy online, but I have to be licensed. You have to be licensed to do
Yep.
your job, but people can, it's very frustrating to be honest with you. It makes it feel like our world is getting commoditized, and I understand that. But I think if you pull up Summit Insurance in Northern Colorado on Google, we've got 1,100 Google reviews at like a 4.9. We take a lot of pride in that because we do take
Awesome.
pride in kind of slowing down the process and really trying to educate people. And I think that's what separates it from that online experience to having an agent. Our A couple of our carriers actually rate me as an agent. Okay, and what being in those upper echelons allows me to do is have a more of a direct connection to a claims adjuster manager, right? Where you go online, you're kind of you don't know who you're dealing with, right?
Right.
Or you might be dealing with a different person every time you go
Yep.
online for that claim situation. Whereas you come in our office, and we have a designated person that does claims in our agency. I really like that. It's not whoever answers the phone just kind of does whatever. We
Yep.
specialize, and I think it does provide that different experience that is really important to us and leads to a quality client experience.
Yeah, for sure. I mean, that's kind of in my industry too. I mean, I'm with it from start to finish. And I know
Yep.
we sometimes, I mean, in some cases, we rely super heavily on you guys because sometimes there is that
Right.
debt to income ratio that we need to
Yep.
to meet.
Yep.
And I mean, I know there's tricks and trades to that, which we won't get into on
Right.
this, but we appreciate that when you guys are able to turn those things around pretty quickly and make the
Yep.
numbers work so that we can get these people into their homes.
And again, it's like a lot of things. It comes back to I think a high level of organization and communication. What you're talking about. If we introduce the client to those topics early in the contract period, right, versus waiting till the end, it's a much better experience for the client. They feel much more at ease, much more educated on the process itself, and that they are going to get the coverages that they want. We're just
Right.
going to have to go maybe a different route to get there until closing day. And when you're able to have those conversations up front and possibly have them together or at least introduced uh, one person to the other, I think it's a much better experience for the client.
Oh, for
Makes people
sure.
like you and I much more referral worthy.
Definitely. Yeah, I try to get my people when they're making offers. I'm like, once you're making an offer, start shopping this, like with your
Yeah.
current person or with someone, and just get an idea
Hmm.
of what that's going to look like. Because I'm obviously putting an estimate in there. It'd be nice
Yep.
to have an actual number because you just don't know. I mean, I don't know what the
Right.
house is like. I don't know what the area is always like or that neighborhood. So
Yep.
I try to get them on the ball before we're even under contract. But
Yep.
obviously, as soon as we are, that's the first thing I say. I'm like, start
Yep.
shopping.
Yep. And that's good on you because a lot of people, and with the volume that we do, we probably write 150 homes and or condos a month. And so we see a lot. We see a lot of situations where it's handled, I think, extremely well for the client. And then other times where it's not, and it creates a lot of unnecessary anxiety for the client. And again,
Yeah.
people in your world, people in my world, realtors, we're all living on. We would all love to live on referrals, and to me, it's about structuring that process to make all of us in that circle more referral worthy.
Definitely. No, I don't disagree with that. I mean, and this kind of rolls into it too. If you could give homeowners one piece of advice on
Mhm.
insurance, what would that be?
Uh,
For
I
me, it'd
think
be
it would
shop
be two.
early.
Yeah, I think it'd be two things. I think one would be for the home itself, understand your roof coverage. There's a lot of our primary carriers, we have full replacement costs. So once you decide on a deductible, that deductible is going to get you that brand new roof. Other carriers have what's called a roof payment schedule. So once that roof gets to a certain age, let's just say it's 10 years, now you start bringing um, actual cash value into it versus replacement costs, right? And then sometimes each year after, let's say the 10-year mark, less and less of the roof is covered or percentage wise. So a lot of people, that's how we, win a lot of people over is we just walk them through that. We walk them through the math. Hey, your roof is actually 12 years old. How much do you think of it's covered? And they'll say 100%. We're like, not even
Right.
close.
Yeah,
Or
that's
what do you think would be the bill for your to replace your roof? And we arm our salespeople and our service people with those numbers on average, versus with us, hey, it's just, do you know your a lot of people, it's much easier for people to know their deductible than to do all that math on a
oh
roof
yeah.
schedule and a
Oh yeah.
payment schedule and stuff like that. That's the big one we see on homes specifically. And then the other one I would just say is understand your liability limits on the auto. Again, we're beating that, but that's something that we see a lot, and it's just so unfortunate when somebody is in an auto accident and they think that they have much more coverage, right? They hear full coverage from an agent online, and they
Oh yeah.
think that full coverage means that they're totally covered. Plus, financially, it's a high dollar value, and it's too many
That's
times
crazy.
it's just not. It's just not.
Yeah, that's so crazy. Well, I mean, what do you think makes Summit Insurance and yourself,
Mhm.
did you own it? Do you own it?
Yes,
Yeah,
yes,
that's what I
yes,
thought.
yes.
What makes you different from other agencies, and why do clients put their trust in you for their insurance needs?
I think it goes back to when, like I said, when I first bought it, and I was coming out of a completely different industry, and I just was listening to these phone calls. The staff that I inherited when I bought the agency was having, and they were talking at like a 300 to 400 level, and I'm like, guys, we gotta bring this down, because I think a majority of the people were like me, and I think a lot of times people on the other end of the phone, those prospects, those clients, are just saying, uh-huh, because they don't want to be maybe possibly exposed or embarrassed. And so we have really changed our talk paths. We've really changed our questions, whether it's in an insurance review or in a sales situation, to have people open up but not feel like they don't know what's going on. And
Yeah.
I think that's big, because people are open and honest then. And then if they're open and honest, then we can actually get something accomplished that is meaningful and protects them. If they don't, and they say they know, yeah, I know. Okay, well, all right. Because then what happens is unfortunately a year later, 2 years later, something does happen and there is a claim,
Yep.
and they say they knew, but they didn't, and now they're upset, and it gets into a whole deal. So I think a lot of it comes back to how you communicate with your clients, how you communicate with those prospects, and just have that atmosphere where they feel it's okay to open up, and you're actually able to accomplish what you need to do for them.
Yeah, I fully get it. I've had to try to not explain so much in my industry because with mortgages, there's a
Yeah,
lot. When you're buying a house,
yeah.
like there's a lot. And I mean, just recently, I'm like, how much and how little do you want to know? Because I have some people
Hmm.
that don't want to know really anything. They just want to get to the closing table, which I personally don't like because I kind of like them to
Right,
know what they're getting into. And then I have others that want to know every single piece and we have to go over things 20 times. And I'm totally fine
yeah,
with that. I just want them to understand, kind of like you,
right,
like what you're getting into because it is a huge investment, you know?
yeah,
So,
yeah. Yep. If you're going to
well,
invest it, you got to protect it. So, yep, I hear you.
yeah, exactly. Well, I
Yeah.
won't take up any more of your time, but before we
All right.
go, I
Yeah.
wanted to ask you one last question.
Gotcha.
Outside of work, what do
Yeah.
you like to do for work or for fun?
Um, well, like to enjoy the great state. So we're in the mountains a lot, whether it's fishing, mountain biking, on trails. Um, we've got 3 dogs. We love to golf, do all those things. Sitting here looking in the sales bullpen. I've got my 23-year-old son works for me, and then my daughter just graduated and is heading off to college next year. So it's a lot, but it's also really fun. We try to stay really involved um, through the agency and the community as well, and that takes as you know, that takes a lot of time to do that as well.
Oh yeah. Oh yeah.
Yeah.
Well, definitely. That sounds a lot like
Mm.
me. Anything outside.
Yep,
Well,
exactly.
I will let you get back to your day. I
Okay.
appreciate you so much. Everybody give BJ a call at Summit Insurance and
Yeah.
let him quote something out for you.
All
Thank you
right.
so much for being on the show.
Thank you, Kim.
Take care. We'll see you guys later.
Bye.